Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has made money, lost money, and got it all back again. He has appeared on HGTV, developed waterfront property, a hotel, and wrote a book called The Perfect Investment. Paul Moore is managing partner at Wellings Capital and is the co-host of the How to Lose Money podcast. Paul, welcome to Purchase to Profits. It's great to have you on the show.
Hey, Seth, I actually have a mute button and I know how to use it now. Hey, great to be here.
That's great. We'll be talking about your podcast in a little bit later on, but I just want to explain to people that I've listened to your episodes and it's not all about losing money. Like there's some really good stuff in there.
Yeah, it's really fun doing that. You know, I decided years ago that I knew some successful people who from the stage always told their success stories, but I knew the people in the audience were having some frustrations thinking, oh, gosh, I'll never be like them. I'll never be that successful. And I was like, wait a minute. If you knew their whole story, you would know that they're just like you 20 years ago. Yep. And they had failures and problems and heartache too, just like you do. And I said, you know, if I ever had a way to do it, I would tell my failures when I got in public. And so I started talking about my failures. It caught on, and I said, hey, I'm going to do a podcast where I interview other people about their mistakes, their failures, their heartache, their losses, and it's just been so much fun, Seth. We've done about 150 shows, and I'm really enjoyed it, and I think our audience has appreciated it.
Yeah, I'll definitely vouch for that. I've listened to what you're doing, and it's some good stuff. So 2 thumbs up for me and a recommendation. So go check out the How to Lose Money podcast. So to kick things off, Paul, do you want to tell us about your real estate goals right now? Where are you at and where do you want to go?
Yeah, so I wrote the book called The Perfect Investment about multifamily investing. And what I found is that right now, at least when we're recording this, the multifamily market is largely overheated. There are people like Joe Fairless and probably you who are finding deals, but there are a lot of people who are overpaying for deals. A lot of people who are either wolves in sheep's clothing, or there are newbies, or there are people with 1031 money, or there are people with self-directed IRA money, or international money, or institutional money. All these people are running at multifamily, and they're running at smaller deals in smaller towns, and it's caused it to be overheated. And so I got really frustrated. We had just closed on a Lexington, Kentucky apartment deal in the December of 17. And within a few months, we had investors saying, where's the next deal? I said, at the rate we're going, I don't know when we'll ever have another deal. And so I finally said to my wife, I've got to think about expanding. So we decided to expand into self-storage and mobile home parks. But I realized, Seth, I didn't have the team to do that. I understood how money is made. I understood the value add proposition, but I didn't have a team who had done it for 10 or 20 years. So we decided, sort of like Warren Buffett after he'd had some problems early on in the 50s, to start investing in other great teams. And so we kind of followed in his footsteps and said, okay, we're going to find some great operators. We're going to invest in them. And we did that throughout 2018. And in January 2019, we decided to form 2 different funds where we are basically putting together a diverse syndication, which is a fund of other operators' deals. And we have preferred pricing with them, and we're putting those deals in our funds. And so our goals right now are to find fantastic operators with great deals to offer to our investors.
Oh, that's great. And maybe for somebody who's watching who doesn't know the difference between a syndication and a fund, do you mind explaining the 2 differences?
Yeah, so a syndication, I think we all know, what that is. Basically, it's using other people's money, if you will, to pulling it together into a large group and investing in a deal. Well, a fund is simply a diverse group of several deals all under one syndication.
Yeah, and there's some really great advantages with having a fund because you don't have to, once you find a deal, you can act on it immediately because you have that money all ready to go. So especially, there's quite a number of people. I've had Joel Block on the show. He spoke at length about funds, and it's really interesting to get into the differences in the pros and cons.
Yeah. Right.
So for yourself right now in your capital raising, do you have a certain amount that you're looking at raising? Do you say, oh, I want to raise 100 million this year? Are you thinking that way, or are you just kind of going to see where it goes right now?
Yeah, so we have two funds. We have investors who really want to get income, and so we were hoping to get them, something like 6, 7, 8% income annually, and then appreciation on top of that. We have other investors who say, I don't want any income. Don't give it to me. I just want to see my assets grow. And so we were looking for value add or even ground up deals for them. Well, those are very different goals. And so we were really scratching our heads trying to figure out how to do that. And that's when we decided to do two different funds. So we have an income fund and then we have a growth fund. And those two funds are each set up for $10 million. And we're hoping to raise $10 million in each fund in 2019.
All right. No, that's a great goal. And so for yourself, making that transition from doing that deal at the end of 2017 to creating a fund, what sort of changes did you have to make in your business to do that? Because it's a bit of a different animal.
When we were doing one-off deals, we were able to say, look, we're going to fill up in probably a week or 2 weeks, and then that'll be it. And here's all the very specific details of this deal. And so there was time pressure, there was urgency, there was scarcity, all those things that marketing people and copywriters really love. And the funds don't really have that. The details of every specific deal aren't as clear because we don't even know what we're going to be investing in with current money that comes in 3 months. We're actually not taking money in, by the way, that is until it is ready to be placed. So until we have a deal, we're actually telling investors, hold on to your money. We don't want the time pressure of having money, sitting around for months while we are looking for an operator, because we don't want to make bad deals,
Yeah.
So, but the scarcity, the time pressure, all those standard marketing sales things are not really there. So that's the main difference. I think the benefit to investors is, again, the intense vetting we're doing of operators, geographies, deals, and the asset class in the first place. Mm-hmm. And the second benefit the investors are getting are the diversification of different asset classes and all these different things. I guess the third benefit is they're getting a professional investment experience. We pay a lot of money for our software, for our portals, for everything else. And so investors are getting really good communication and a really smooth investment experience.
Yeah. Are you looking to take the fund, maybe into office and retail? Or are you just going to focus on multifamily, self-storage, and mobile home parks?
We're really concerned about a potential downturn. And this is, we're only 5 months away from the longest expansion in U.S. history. And so, I'm kind of thinking there might be a downturn at some point. I don't know if it'll be like 2008, but yeah. So we are actually looking for assets that have done really exceptionally well during downturns, and self-storage and mobile home parks and multifamily have all done exceptionally well during downturns. I think that's where we're going to keep it for now. We may expand someday.
Yeah. And, having that opportunity fund or the vulture fund to take advantage of those downturns, that puts you in a really good position at that point.
Mm-hmm. Yeah, I like to have that opportunity at some point. I been studying Warren Buffett and Howard Marks, and they talk about catching a falling knife. And it's very dangerous. It's very scary. It takes a ton of courage. But I'm hoping that, unlike 2008, when I was selling in 2008, that I'll be in a position to actually buy in the next, fall.
Mm-hmm. And well, now that you bring up 2008, I know in the intro I had mentioned that you had made money, lost money, and made it all back again. What did it feel like for you as an investor going through 2008? And you had just mentioned you were selling a lot. What was it like, and what would you do differently?
Well, if you like, I can tell you the whole story of what happened.
Yeah, give it to us. Come on.
Okay, so I quit Ford Motor Company in 1993, and 5 years into a startup, we ended up being, excuse me, acquired. Got a little cold here. Got acquired by a publicly traded company, and so when we did that, I had a couple $1 million on my hands, and I thought I was an investor, and I thought I was semi-retired. Both were not really true. Semi-retirement at age 34 makes no sense when you're a high-energy entrepreneur, and I was bored, and I thought I was going to become this great father and great husband, and I became the worst version of myself because I was bored to death. And so I started investing in all these different things that, I really thought, Seth, that they were investments, but they were really more like speculations, because I didn't know the difference between investing and speculating. Investing is when your principal is basically safe and you got a chance to make a return. Speculating or gambling is when your principal is basically not at all safe and you have a chance to make a return. And so I was speculating, thinking I was investing, and I lost a lot of money. I made a lot of money too, and that's just the nature of gambling, I guess. But I lost way more than I would have ever been comfortable with. And so I found myself in December of 2007, not knowing how bad the downturn was going to be. I knew it was bad because we were actually near DC, and DC got hit quite a bit long before the rest of the country. I knew it was bad, but I didn't know how bad. And I found myself $2.5 million in debt. Now, all that debt, every bit of it was tied to real estate in some way. It wasn't credit cards or unsecured debt. But I was sitting in my chair one day, and one of my morning rituals, I know we're going to talk about that later probably, is meditation. And I was trying to do a little meditation. I had this idea. I thought, what would George Mueller do? Now, George Mueller was a guy in Bristol, England in the 1800s. He lived throughout the whole century, and he started housing orphans. And he had housed about 10,000 orphans in his lifetime. He was actually a hellion who became a pastor. And he housed all these orphans, and he never asked anybody for a dime. But he needed, in today's dollars, tens or actually even hundreds of millions of dollars over the course of his life. He never asked anybody for money. And he was able to always raise enough money because, kind of the, whatever you want to call it, reaping and sowing, or some people call it karma. Basically, he was doing good things, and all the money always came in, even though it was a stretch. And so he also had a really strong opinion against debt. And so I thought, well, I'm already in trouble if I want to be like him, because I'm $2.5 million in debt. But what would he have done? Well, I thought he would have given his way out of debt. Giving your way out of debt, that's a crazy idea, but the idea was growing on me. And so by January of 2008, I called my family around and said, hey, guys, we're going to give our way out of debt. And my wife didn't think it was that funny. No. And my kids didn't understand it. It didn't make sense to them. Of course, it didn't make sense to my friends either, who said, you're just going to have to declare bankruptcy. Let's face it. I said, no, I don't think so. I'm going to give my way out of debt. And if I do have to declare bankruptcy, so be it. But I don't think that's on my radar. I think something great's going to happen here. Well, 4 weeks into this, we started giving a set weekly amount to charities and nonprofits and churches. And we were already giving generously before that, but we gave a set weekly amount, which was way above what we could afford to give. And 4 weeks into this, I met a guy at a Subway restaurant. He was a real estate developer. And I said, hey, I got this 5-acre waterfront parcel. I got $2.5 million in debt, but a huge amount of the debt's with that parcel. If I could only subdivide it into 5 1-acre lots, I could get out of debt. And he said, and I'm not going to go into detail right now, Seth. He just basically, and it's just too technical at the moment, I think. He said, well, why don't you try this? There's a certain law that would allow you to subdivide. I said, no, that won't work. I already looked into that. He said, you may want to try it. And right then a light bulb went off. And I just realized, boom, what if I tried to turn the law on its head and actually use that same law that prevented subdividing to actually subdivide the lots? And so I went to my surveyor and he just shook his head. He goes, that is crazy, but it's worth a try. Why don't we go to the Planning and Zoning Commission? So 2 days later, I'm sitting in front of the Planning and Zoning Commission at the county, and the lady, she's an older lady, and she hears my plan. I show her the lots and the plat, and I show her what I want to do, and she looks up over her glasses and she gets a smirk, and she's like, I've been working here for decades and no one has ever tried such an outlandish plan. And then she smiled and said, but I can't stop you. You're right. The law was not written to cover this exception. And so I went ahead and subdivided the lots, and Seth, right in the height of the Great Recession, I mean, right when things were, talk about a falling knife, September of 2018, I sold 4 of those 5 lots, and I sold them for a very nice sum of money, and I was actually completely debt-free 13 months later.
That's a great, that is karma coming back, right?
No kidding. It was crazy.
Yeah. And you had mentioned real quick about meditation and your routine. So do you want to explain, what routines you have that helps keep you focused?
Yeah. So every morning, so I'm really fast paced, driven. I'm always working on something. If I let myself, my time gets away from me. I'm working 7 days a week, and I don't really like that about myself. I really consider myself a family man. So one thing I do is the first hour or so of every day, I try to set my mind. I try to meditate. I try to read. I try to journal. I try to pray. And I think, Eastern meditation is a type of meditation where you empty, from what I understand, they empty their mind and they say, basically, I'm just going to completely empty it and allow, whatever to come in and fill it. And that's just not what I do. I guess you could say it's Western meditation. I just made that up. Sorry.
We'll trademark it.
Yeah, right.
Yeah.
But basically, I try to fill my mind with stuff. So I actually make a significant number of declarations every day, sometimes dozens of declarations I've got written out about who I want to become, what I want to be, how I want to interact with people today. I make declarations about my future giving goals, how much we want to give. And I've got some really big goals that if you ask me after this, I'll tell you about. And I meditate on that. I set my mind on that. I actually meditate on scripture. And that's the kind of stuff that I do in my morning meditation time.
Yeah. And how long have you been doing that meditation?
I'd say about 30 years.
Oh, wow. Okay. So quite a while. Okay.
Yeah.
Wow. And what did you notice? I know this is going back like 30 years, but have you noticed a market difference from before and now?
It's actually not so much before and now. It's more like when I miss 2 days in a row, I can tell a difference. So
Really?
like when I miss one day, like I missed yesterday because I had to get up at 3:30 in the morning and jump on a flight. And so I basically more or less missed it. But if I miss 2 days in a row, I can tell a definite difference, and maybe 3 days especially. And so I do that maybe once a month. That'll happen, and I really, really don't like myself. Now, the problem is I really believe in the power of our thoughts and words, and I believe, I'm just going off topic here a little bit. I believe that because I believe what I just said, it's going to make it worse. Does that make sense? In other words, because I'm like, this is day 2. And then I start, it's kind of like that, what's that thing called? Murphy's Law, which I absolutely detest, by the way. If anything can go wrong, it will. Well, I don't believe that at all for my life, but it's kind of that kind of thinking. Like, it's day 2. Oh, no. And I don't think that's a karma thing, or I don't think it's anything like that at all. Or, I just think I just notice that I'm grumpier, I'm more short-tempered, and I'm not making as good decisions.
Gotcha. And you had mentioned you have some really big goals that you go over doing that. Do you want to share those really big goals?
Yeah, Seth, I don't know what you know about human trafficking, but man, it is a tragedy. I tell you, if I was alive in the 1850s or 60s, I would want to believe that I'd be an abolitionist. And if I was alive, or at least an adult in the 1960s in the US, I want to believe I'd be fighting for civil rights. Well, there is a civil right that has been ripped away from tens of millions of people, and they are enslaved. And it's not causing a civil war like the U.S. had. It's not causing headlines like civil rights movement did, but it is ripping the life out of sometimes some people believe up to 40 million people. Seth, let me put it in perspective. If you took the record profits, and I didn't say the average profits, the record year profits for Apple, General Motors, Nike, and Starbucks, added those together, doubled that number, that would be less than the annual estimated revenues generated by human trafficking. This is a tragedy, and it's serious. And so I want to do something about it. And so I am my goal is to spread the word about this, which I'm doing right now, and also to raise awareness and try to generate $1 billion in money to fight this in the rest of my life. And so that $1 billion is actually only a drop in the bucket for what is needed to fight this. But I'm really trying to raise awareness and raise money to do that.
Yeah. And would that $1 billion go towards police task forces, or where would you allocate that money?
You know, kind of similar to our funds, we don't know what's best. We're not experts in it. So we're going to try to find really, really credible people with great track records, and we'll ask them what's best, and we'll invest in them. And so, for example, there is an organization with about a 300-acre farm near Kansas City, and they rehabilitate people who have been through this and been rescued. And there's a lot of people out there who say that these poor little girls and some guys even cannot be rehabilitated. They've been too damaged. But this organization has found great, wonderful ways to bring them hope and healing and a new life. And so I'm going to invest with people like that. I'm also going to invest in people who are trying to create laws or pass laws, to fight this great evil.
Yeah, no, that's certainly a powerful message. And we'll be including a link to your website. So if somebody's looking to support you with that, they can click on the link and get in touch with you.
Yeah, that's great. I mean, They can get in touch with us. I'm not actually raising any money right now myself. We do have a nonprofit for that. It's not something that we really it's not like I'm actually asking anybody for money, but if anybody wants to give, I could actually give several organizations they can give directly to. They don't have to give anything to us.
Yeah, no, that's great. And I think it's important. What I've noticed is with all the successful real estate investors, they always have a higher purpose other than themselves that they're always striving towards. And it's the people with those goals that affect other people and not really centered around themselves that really do some great things. So that's a really great goal that you have.
Thanks, Seth.
Yeah. So to really maybe transition from that, real estate's allowed you to focus on your higher purpose goal. How else has real estate changed your life?
I tell my son, I tell my interns and others, like if I would have known in my, let's say, 20s or even 30s what I know now about commercial real estate, I never would have done anything else. And so, residential real estate, which most everybody's familiar with how it's valued. You may be Chip and Joanna Gaines Jr., and you may be able to rehab your house and spend $500,000 making it the most beautiful house in the neighborhood. But if the houses in the neighborhood are limited to, $350,000, your comps, your comparable properties are going to limit the value of your house. Commercial real estate, as you know, Seth, is totally different. We've got a value formula, which is the value is the net operating income divided by the cap rate or the capitalization rate, which is the going rate of return for that type of asset in that location at that time. And so if you can increase the numerator, the income, and decrease the denominator, the cap rate, you can dramatically increase the value of the asset. But it's better than that. Leverage allows you to multiply that increase even further to the equity investors. And so, quick example, if I have a mobile home park that I can increase the rent $1 on one lot. I therefore increase the income $1. I'm really good at math. Okay, it's $12 a year, and that $12 a year divided by a 6 or so % cap rate. That's $12 divided by 0.06. That $1 a month I was able to generate in income is going to translate to $200 in value. It's sort of like a price to earnings ratio of a stock. And so that $200 in value sounds great, but that's at the asset level. If you have 60% loan to value ratio on that asset, the investor impact, the impact to the equity, is about 2.5x. Okay, so $1 is impacting the investors. The asset value $200, and it's 2.5x in leverage. So, quick example. One of the companies we invested with just added a 1 acre. They took 1 acre of weeds at their weeds at their mobile home park, and they actually fenced it in, and they paved it, and they actually said, okay, if you've got a boat, an RV, a camper, a third or fourth or fifth car, you've got to rent a spot inside here, and because we're going to clean up this mobile home park. So they made it a nicer park. And they also are gaining revenue from this. Now, when this is fully leased up, they're going to throw it open to the neighborhood after that. When this is fully leased up, it will generate $10,000 a month in rent. By the way, it cost them $100,000 total. So when it's fully leased up, it'll be more than 100% ROI on that $100,000 that they spent. But that's $120,000 a year. Now you divide that $120,000 by a 0.06, let's say a 6% cap rate. And if I did my math right, I think I did it some time ago, but I think that's a $2 million increase in value. They spent $100,000 in quite a bit of effort over a couple years to get that, but it's $2 million in value. Now, if they paid $5 million for the mobile home park and they got 60% loan to value debt, that means they got $3 million in debt, $2 million in equity. They just increased the value of it by $2 million. Their equity just went from $2 million to $4 million from one change, and it wasn't that hard. That doesn't include raising the rent. That doesn't include all the other things that could be done, like adding, little carports and adding storage sheds and increasing the lot rent and increasing the number of lots. That's just from that one change. They double their equity. And let's say it took 3 years to lease up. That's a 33% annual ROI to the investors from one change. That's the power of commercial real estate. And of course, multifamily, self-storage, other commercial asset classes have the same benefit. It's a beautiful thing.
You just made me want to buy even more real estate.
Every time I think about it, I feel the same, Seth.
Yeah. Well, that's great. And so for you, that using that power of real estate, like where do you see yourself in 10 years now with your business?
Well, I really think that we're going to be, our income fund in particular is going to be having refinance opportunities. So we're going to be taking principal out of that, handing it back to the investors. And some of them have already said that they don't know what to do with that. So we're going to be we plan to open up a new fund every year, a new income fund, a new growth fund. We might add an opportunity zone fund or something else, but we want to have other places for the investors to invest back in. So we plan to do a new fund every year. In 10 years, we hope to have, 10 different funds in each class. So that's 20 funds.
Yeah, no, that's a great goal. We'll have to have you back on, and so you can tell us all about it.
That's
great. Well, Paul, if somebody's looking for some more information about your company and yourself, where can they find you?
It's wellingscapital.com. That's WELLINGS capital, CAPITAL.com. And you can fill out a contact form and find me there. You can also find me on Bigger Pockets.
Yeah. And where can somebody find your podcast?
Oh, How to Lose Money can be found on iTunes and Google Play and Stitcher and at howtolosemoney.com.
No, that's perfect. Well, Paul, just want to say thanks so much for taking the time to share your success with us today.
All right, Seth, it's been a real honor. Thanks for having me on the show.
Yeah, no, it was my pleasure. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.